We'll look at the group's origins, their advanced methods, and most importantly, what this means for the future of cybersecurity, especially in industries that handle vast amounts of sensitive personal and financial data. Let's start with the identity of these hackers. Scattered Spider isn't your typical cybercrime group operating out of a single basement or led by one mastermind. They're a loosely affiliated but extremely coordinated collection of cybercriminals. What makes them so formidable is their ability to function like a decentralized network, sharing tools, tactics, and strategies in real time. This fluid structure allows them to adapt quickly and hit harder than more traditional cybercrime outfits. You might also hear them referred to by other names: Zero Tapas, UNC, 3944, Scatter Swine, Muddled Libra. These aliases reflect the different facets of the group, as identified by various cybersecurity teams. They first made waves by targeting large corporations in the retail and telecom sectors. What made their attacks stand out wasn't the malware they used or any zero-day exploits. It was their mastery of human behavior. While most hackers break into systems, Scattered Spider often convinces people to open the door for them. That's what social engineering is all about: manipulating trust, urgency, or fear to trick employees into revealing credentials or overriding security policy. These aren't just phishing emails with spelling mistakes. We're talking about carefully crafted, highly personalized campaigns, sometimes supported by voice calls, texts, or even fake internal support chat. 3 tactics define their playbook: phishing, SIM swapping, and something called MFA fatigue, also known as push bombing. In phishing, they impersonate trusted figures, like IT staff or executives, to collect login credentials. SIM swapping is even more invasive. They hijack a victim's phone number by convincing a carrier to transfer it to a new device, giving them access to SMS-based 2-factor codes. Then there's MFA fatigue, a simple but devastating trick. They bombard an employee's device with repeated MFA prompts, often late at night, until the person, out of exhaustion or confusion, finally hits approve. That one slip is all it takes to compromise an account with privileged access. No malware, no brute force, just human error, systematically engineered. What's even more chilling is their strategic focus. Scattered Spider doesn't cast a wide net and hope for hits. They specialize. They'll target a specific industry, learn its structure, vocabulary, workflow, and even employee habits before launching a wave of calculated attacks. This sector-by-sector approach gives them insider-like precision. For example, when they hit the UK retail sector, they didn't just breach stores randomly. They targeted high-value brands like Marks and Spencer, Harrods, and the Co-op. In each case, they exploited known patterns in retail operations and communications. After causing significant damage in the UK, they shifted their sights to the US retail sector, where similar vulnerabilities existed. And now, according to the Google Threat Intelligence Group, they've pivoted once again, this time toward the insurance industry. The move makes sense. Insurance companies sit on massive data repositories, often rely on older systems, and have extensive customer-facing infrastructure, including call centers, perfect targets for social engineering. In essence, Scattered Spider is applying a well-practiced formula to a new field, and if past patterns hold, the insurance industry could face widespread disruptions unless it takes swift, coordinated action. So why is the insurance industry suddenly in the crosshairs of one of the world's most dangerous cybercriminal groups? The answer is a blend of technical vulnerability and strategic opportunity. At their core, insurance companies are custodians of incredibly sensitive data: names, addresses, social security numbers, financial histories, even medical records. From the perspective of an attacker, this isn't just valuable, it's highly exploitable. A breach in this sector doesn't just result in operational disruption. It can unleash a flood of data that can be sold, ransomed, or used to orchestrate further attacks. And while insurers handle data that rivals the sensitivity found in banks or hospitals, many of their systems haven't evolved at the same pace as modern threats. Unlike tech companies, which are built around digital agility, insurance firms often operate using legacy infrastructure, outdated networks, on-premise servers, and homegrown platforms patched over decades. These aging systems were never designed to withstand today's level of persistent cyber aggression. Moreover, insurers function within highly regulated environments. Compliance requirements dictate the handling of everything from client data to internal processes. While these rules are designed for accountability, they often introduce operational inertia, slowing down upgrades, making innovation risk-averse, and elongating incident response times. In short, insurers are not just holding the crown jewels, they're guarding them with brittle locks and rigid bureaucracy. To a group like Scattered Spider, this makes them high-value, low-friction targets. And this isn't speculation. it's already happening. In June, Philadelphia insurance companies detected unauthorized access to its systems. According to public statements, the intrusion was identified on June 9th, prompting an immediate disconnect of affected servers. The fact that their public-facing website is still displaying limited functionality weeks later underscores how disruptive and far-reaching these attacks can be. It's not just a momentary glitch, it's a systemic crisis. Just days earlier, Erie Insurance, another major U.S. provider, began facing operational interruptions. On June 7th, the company detected what it called unusual network activity. The rapid escalation into a full-blown cybersecurity incident was later confirmed in a filing with the U.S. Securities and Exchange Commission. Eerie acknowledged the breach and launched containment efforts, but the damage was done. These aren't obscure firms. They're nationally recognized carriers responsible for protecting the assets and identities of millions of Americans. What's most troubling is how these intrusions align almost perfectly with ScatteredSpider's known playbook. It starts with social engineering, manipulating employees into surrendering access. Then comes help desk impersonation, where attackers pretend to be staff members needing urgent password resets or technical fixes. Once they've breached the perimeter, the real damage begins. The group is known to deploy ransomware strains like RansomHub, Chillin, and DragonForce. These tools not only encrypt systems, but also exfiltrate sensitive data beforehand. Victims are left facing two simultaneous threats: loss of operational access and the public exposure or sale of their private data. This is the hallmark of double extortion, a tactic where ransomware isn't just about locking you out, it's about holding your most sensitive information hostage. The pressure to pay becomes immense, especially for companies bound by client confidentiality and regulatory obligations. And this is where ScatteredSpider thrives. They understand not only the technical side of the breach, but also the psychological and reputational pressure it creates. According to Google's threat intelligence team, these attacks are just the beginning. Analysts warn that this group doesn't just attack, they embed themselves. They learn industry-specific behaviors, mimic internal workflows, and once they've fine-tuned their methods, they scale. Insurance companies are now on the front line of this escalating cyber war, not because they're easy, but because they're worth the effort. ScatteredSpider's ability to learn fast and specialize deeply makes them uniquely dangerous. They're not operating in random bursts. They're studying sectors, customizing attacks, and executing them with surgical precision. As more insurance companies fall victim, the group gathers more intelligence, expands its toolkit, and improves its success rate. Unless there is a coordinated and aggressive defense response, this trend could spiral into a full-scale crisis across the entire insurance sector. So what should companies do? The first step is awareness. Many breaches start with a simple mistake: an employee who answers a fake help desk call or clicks a well-crafted phishing link. Training and simulated attacks can dramatically reduce success rates for these types of threats. Next, organizations must enhance their identity and access controls. According to Google, one of the best defenses is segregating identity systems and hardening MFA processes. This includes requiring additional verification for password resets, enforcing strict controls for high-privilege accounts, and monitoring login activity, especially from unfamiliar IPs or VPN ranges. Security teams also need real-time visibility into their environments. This includes endpoint monitoring, logging unusual authentication requests, and segmenting networks so that even if one part is breached, the rest remains protected. Companies that responded quickly, like Erie and Philadelphia Insurance, were able to contain damage. That response window is crucial. One underrated risk is help desk impersonation. ScatteredSpider often targets support staff by pretending to be executives or employees needing urgent access. In some cases, they use aggressive language or even emotional manipulation to pressure staff into bypassing normal protocols. Training help desk teams to recognize these red flags can prevent initial access entirely. It's also worth noting that cyber insurance itself is becoming more complicated. As providers of insurance fall victim to cyber attacks, the industry may tighten underwriting standards or raise premiums, especially for clients in similarly vulnerable industries. This could create a feedback loop where high-risk sectors face higher costs and stricter compliance requirements just to get coverage. Meanwhile, regulators are watching closely. As attacks continue to rise, there's growing momentum for stricter federal guidelines around cybersecurity reporting and incident disclosure. This may force insurance companies and others to modernize their defenses more aggressively. And what about Scattered Spider? Their success suggests we haven't seen the last of them. As long as attackers can exploit human behavior and find cracks in identity systems, they'll keep evolving. Their shift to insurance is a wake-up call. No industry is too traditional or too niche to be a target. So what can we take away from all this? 1. Social engineering is still the most dangerous weapon in a hacker's arsenal. 2. Industries slow to modernize are being actively studied and exploited. 3. Responding to attacks isn't enough. Prevention and resilience must be built in from day one. If your company works with sensitive data, whether it's insurance, healthcare, education, or finance, this threat is on your doorstep. Understanding it is the first step towards stopping it. Thanks for watching Tech on the Mind. If this video helped you understand the stakes, hit like, subscribe, and share it with someone in your network who needs to see it. Stay safe, stay informed, and don't be the next headline.